But let's focus in on the IPO world, and Laxmi Organic Industries IPO opens today, the issue rather, closing on the 17th of March of about 600 crore rupees. Let's connect with the management then, and we've got Goenka, promoter and ED at Laxmi Organic Industries, as well as Partha Chowdhury, who's the CFO of the company. Gentlemen, and good to have you on ET now. To begin with, it's a 600 crore rupee IPO, where I understand that 300 crores is fresh issue and the remainder is for the OFS. Let's talk about the proceeds, how you plan to utilize this. Harsh?
So indeed, we are raising actually 800 crores, and 200 crores has been allocated as a pre-IPO block. 500 crores of the 800 will go into the company, and we will be primarily utilizing that for two major capex expansions that we have. One in the fluorochemical business segment that we're getting into, and the existing in the SI vertical or speciality intermediates vertical that we have.
Okay, stand corrected there with that fundraise. Now, Partha, your products are mainly divided into two broad categories, the AI and SI. Just give us a sense of the demand scenario as well as the kind of growth potential that you see for both of these products.
So, as you rightly say, there are two verticals, essentially the AI and the SI currently. These we cater through in both of the segments, we cater to the pharma, agro, pigments and coatings, paints, etc., flexible packaging. And if you observe, all these end user markets are growing at double-digit numbers. And they are also expected to grow at that level domestically. And internationally, they are high single digit. Therefore, I think we are in the right space in both the verticals. In the AI space, we are probably slightly upstream of the FMCG's place. And therefore, we expect good traction going forward in both these verticals. Our new vertical, FI, which is fluorochemicals, we are starting off with, and we expect to complete the project in the next financial year. Historically, we have grown the revenues, the EBITDA, and the net worth by around 20% over the medium to longer term, and we expect to maintain this trajectory and better.
Sure. That makes sense. Harsh, just to get and understand as well, in terms of the kind of segments you're looking at, ethyl acetate has significant market share, of course. The kind of revenue you gain from that segment, the margin contribution, and how you plan to expand market share both in India and globally going forward.
Sure. So in both our verticals, we know our AI business, which is ethyl acetate predominantly, we have about 30% market share in India. And we are one of the largest global exporters out of India as well. We believe that with our current mega site, we can increase and consistently grow this market share as we have historically. On the SI side, this is a little bit more of a niche business, where we acquired this technology from a company called Clariant. And we've been able to take up our market share to about 55% in the domestic space. And the international space is also a new area that we're looking to grow into.
Also, you're the only Indian manufacturer of nicotine derivatives, if I've got the pronunciation right, and that's a 55% market share there. What's the competitive positioning here as well vis-a-vis other markets? India has fulfilled most of the demand, in fact, from Europe, China via imports.
No, so yes, it's diketene, it's chemistry, and we'll try to simplify it for you. They're basically products that go into a variety of applications like various medicines, whether it's a heart regulation or a blood regulation thinner that you take, etc. Now, these products, we are essentially integrated in various value chains. So not only the diketene, but even in the downstreams of them. And that's what makes us unique. So international players would be focused on one segment or part of the segment, whereas we are completely integrated and are able to service domestic and international requirements as a supplier of choice.
Okay. Now, Partha, nearly 76.7% of your revenues come from India. How do you plan to diversify your geographical prospects and your presence, and what is the growth opportunity that you see in India versus overseas?
See, the spaces that we are in. For example, in the acetyls, we look at a market which is about 4 billion in US dollar terms. In diketene, we have a runway which is about 1.2 to 1.5 billion. And the fluorochemical space where we are getting in now has a $10 billion sort of a runway. So the space is very large, number one. And secondly, the consuming markets, as I have said earlier, are all growing at quite robust pace. Currently, we export around 25 to 27% every year, and predominantly the exports are from our acetyls vertical. With the new projects coming in, with the FI, the fluorochemicals business kicking in, our export revenues are certainly going to go up. And they are going to be a much larger share, upwards of 30% is my sense of the total revenue pie of the company.
And what's the outlook then, Harsh, when it comes to the overall revenues, profitability, margins? What are you targeting over the next 1 to 2 years?
So I don't know if you're allowed to make forward-looking statements, but many of these bankers and lawyers have suggested that. But let me give you a historical perspective. So we have managed to grow our specialty business 5 times since we acquired it. We took the first few years to really consolidate, understand the technology, establish that, and then we springboarded to the next level. So we're taking cue from that, applying that same logic to the new 2 verticals, the SI growth and the FI growth that we are seeing. Those will take up significant amount of our capex as that has even been stated in our DRHP. And the AI vertical will continue to grow at market plus end growth rates like you will see in FMCG sectors, etc.